All right, I've welcome back for the episode of This Week in Charts via Carnival Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it. This week's a lot to cover here. A wild week on Wall Street. So spiders here finishing on Friday here down about 0.5%, which that by itself doesn't look like a lot, but if you take a look here on the intraday, you can see we gapped up this morning, sold off, and then rallied up, looking like it was going to be another Friday rally. Same kind of story here. Every time we sell off into a Thursday, Friday, they pull the rug on the bears, and we rally up, and we tried to get back above that 20-period moving average today, and today pretty sharp sell-off. So pretty good price action for the bears. And what I've been talking about on my channel here is, and you guys may have heard me say this before, but we need 100 million shares on the spiders to confirm some bear control. We've got that right now, 99 million. That's close enough for government work there. And we also have 3 days in the last 2 weeks of high volume selling on the spiders, as well as the triple Qs. So high volume selling there a week or two ago, and then so that's 4 days there for the triple Qs in high volume selling. We now have daily chart lower highs and lower lows on the Qs as well. News this week, what did we get? So the other day we did have a downgrade of US debt. Obviously Fitch, everybody's heard about it by now, and that sent yields rallying hard. So 10-year rallying hard this week, although it did come in on Friday today. We'll actually talk about that in a little bit here. But another thing that I think is kind of getting missed, and I think smart money is kind of looking at this, and it's like the downgrade is the headline, but I think another bigger reason for the yields rally and for the market selling off here is the fact that Yellen is going to have to issue essentially 500 billion more in debt than the market originally anticipated. So it was going to be 500 billion by the end of the year. It's now $1 trillion. So that is a big deal there. Let's take a look here. How is the market handling that? Reverse repo, $1.8 trillion drain today, fourth day in a row, liquidity being pulled from the market. What does that mean here? Well, 1, 2, 3, 4 days down in the spiders. So we're seeing that kind of liquidity drain start to take place and start to take hold here. So that's a big deal for the markets. And again, we've definitely done a little bit of technical damage. Let's put our trend lines back up. You guys know every single week I come in here, I talk about this trend line. When we break that, then we can talk about downside targets, downside projections. That is now something that we can do now. We have a break. We even have a back test of the 20. Same thing on the Qs, right? Back test of that 20. So we got through this trend line, we got through the 20 moving average, we closed back below 380, and we can talk about this area. That's where I think we're going to go here in the short term. There's a gap fill around 368, and the 50 MA coinciding with that level. That's where I think we're headed in the near term. I didn't even get into Apple here, but they reported and market not liking this price action. If you want to talk about a trend line break, take a look here. Big sell there for Apple, down almost 5%. That is a huge move for a $3 trillion company. Look at the weekly, big outside move. We just wiped out about 6-7 weeks worth of price action. Monthly here, well below June. And now we're not that far off, or excuse me, July. Now we're not that far off from the June lows. And it looks like we're going to close the week below the previous all-time high there as well. So, no supports built up there. If Amazon wasn't up 8% on their earnings, they did have a very good quarter. This market would probably have been down 2-3% today. So Apple kind of a gut shot for the market when Apple can't rally off earnings, especially when it can't rally. But I mean, it's not like it was flat to negative. This is a big giant move. So that taking a big hit on the Qs. And this is something else I've talked about. I said big tech is likely to come in, and we're going to see rotation into banks, healthcare, and energy. And take a look at XLE this week, having a pretty nice week. It was green in a down tape today. Again, we'll get into those in a little bit later. But let's finish up here with the spiders first. So short term, 442.46, there's a gap right there. And then, 444-ish is your previous pivot high on the spiders from that mid-June period to early July. And then, of course, your 50 MA, and then it's also kind of coinciding with this trend line as well. That's your big level there on the spiders that I think needs to get tested, and we'll kind of reevaluate the market if and when that happens. But I do expect that to get hit, in the next week or so at the very least. I think the Qs can definitely hit it next week. I mean, it's only, we close at 372. It's only 4 or 5 points away, right? So, it's going to be around 367 by Monday. So that can get hit next week. But those are the levels that we're watching here, and a nice sell. Things market maybe starting to come into, started to realize reality here of all the headwinds that are going on. And again, we do, I've talked about this, as we get into kind of the middle part of August, seasonality starts to come into play, especially as we get to quarter three. And, we're up 42% for the year. So you got to expect to give some of that back at some point here. But market's coming in, bears in control here in the short term, and we've done some chart damage. So should be very interesting going into next week. By the way, CPI coming up soon. I'm very interested to see how that is with the recent run in energy. Anyways, let's get over to the Russell 2000 here. Russell's still holding up okay. So that's been the Russell and the Dow have been the two stronger indices here as tech has taken the lead to the downside. This is something I've talked about. We expect the other sectors to get a bid, and we expect tech to underperform. But it's still holding trend for now. So we're above that. It looks like we closed just below the 20 moving average today. I mean, that's not like too significant because you're still below this breakout bar low, and you're still below these above these pivots and above this breakout bar low. But it did come back in along with everything else. This can still, believe it or not, get up to 200. That's really all I've got penciled in for it at the moment, but it is outperforming for right now. So we'll respect the Russell here. Dow also outperforming again. That makes sense with volatility. You go to blue chips, you go to safety, and that is getting the best bid out of the four indices right now. Again, still holding the 20 moving average. If it loses that area and you lose, we'll just say 350, you'll probably go down to 343, 345 on the DIA. So those are the levels that we'll be watching here over the next couple of weeks. Semiconductors, again, trend line. So another trend line break. We've been watching this one for a while. We had some more earnings this week, and recently none of them have been good. AMD was terrible, and that did get a bid the last 2 days. Qualcomm took a good hit, although that came off the lows. TXN, TSM, these semiconductor companies, a lot of them have been missing here and underperforming post earnings. We're finally getting that trend line break. Obviously, the big one, the king, is NVIDIA, and that will be later this month, I believe August 23rd. But that now has lower highs and lower lows here as well. So a little bit more backing and filling here in NVDA. That's going to be a make or break move later this month on the 23rd. And again, I mean, it goes without saying how extended and overbought this is. By the way, more data coming out about their chips, because there just really isn't the demand for those AI chips like they promised, at least not yet. I mean, in the future, of course, there will be. It's going to be very interesting. I'm very interested to see how their earnings goes, because it's not like those chips, even if they are doing anything with them right now, it's not like they're going to be making billions of dollars off of that right away, and at least not enough to justify the valuation. But in any case, SMH right here did snap this trend line here. 150, a break of that takes you to 145. Through that, you've got a nice air pocket down to this trend line here, as well as this one. Anyways, cloud software, again, coming in lower highs, lower lows. That has some good support here, daily chart support at 343. I do think it gets a bounce there. But again, we're back below this pivot now. So on a weekly close, weekly chart support, you've got 338.87. That's your breakout bar low. If you get through that, it's down to this trend line here on IGV, which kind of coincides with that 320 level, that 320 pivot there. So we'll be watching that on cloud software, but then that did back off with everything else. Dow Transport's still holding up. So here's a pro for the bulls right now. You still have a daily chart inside bar pattern. So transports are hanging in there okay. If they can get one more bid, I can't rule out a push to 17,000. If you start to take out, these levels here, you start to get below that low, to take out 16,000, then it's down to 15.5, 15.6. But transports have actually held up pretty well. So again, got to respect that moving forward. All right, over to interest rates here. So again, a lot to cover here. Interest rates as we see Bitcoin there. Interest rates were holding up really well in the middle of the week. Then they did back off here. We're looking at the 2-year note, finishing the week at 4.768. Still holding up, still holding trend here. Again, I talked about this yesterday, but trade and yields a little bit crowded here in the short term. I'm still bullish yields, but that doesn't mean they can't do backing and filling. That doesn't mean they can't go lower a little bit here. They did back off. Obviously, the Fed funds right now at 5.33. That's the big level. If this 2-year yield breaks above that, the Fed's got a real problem on their hands. But right now, yields are backing off. I'm not sure if it's just squeezing or if there was a flight to safety going on. There's lots of swirling rumors about the yen right now, and the implications that a higher crude price can put on the yen if they don't defend it. Japan's already talked about softening yield curve control. They reneged on that Monday, but there's a lot of cross currents going on here. And again, not to get too sidetracked, but yields pulling back. 5-year here, pretty good reversal there, outside move. 10-year, outside move there as well. But again, good breakout there. To me right now, it's just doing backing and filling. 30-year, I talked about 4.2 to 4.25. We went up to 4.3 and change this morning, and then we backed off. So that is just went into resistance. We'll see how that behaves around the 4 handle. But 30-year did back off there. And again, the trade's a little crowded here in the short term. All right, housing, one sector that just will not go down here. XHB up 67 basis points here on Friday. That is still holding trend. That can still get to double top. ITB still, made a new all-time high a few weeks ago. Maybe a little bit of a rolling top look, though, type pattern. So we'll keep an eye on that moving forward. But I mean, Apple down 5% today and ITB's up 1.4. It's just like the sector that will not go down. But if it does lose these pivots here around, 85.50, you're down to 82, 50, 83. But for right now, it's still holding trend there. VNQ weakness. So we had a nice look last week. Then we started to break down, and yesterday had a nice tail candle. So it looked like it was going to get defended, and then guess what? Weekly below that green bar breakout low. VNQ just can't get out of its own way here. The positive is you have higher lows. Maybe you could come down to this trend line. We'll watch that for support. If I can get this drawn in here. So we'll watch that for support, and then obviously this lower one right there. So there's a couple levels there to watch on VNQ. That's probably where it wants to go in the short term, but not a good look to close back below 83.24 on a weekly basis especially. XLF. So that's still holding up, still kind of holding that 20-period moving average. I don't see any real problems right now. That can still get to 36 to 36.25. KREs, believe it or not, also holding up. Again, I do think banks get some money flow here. Post earnings, they are seeing some short squeezing. A lot of the junk companies are seeing short squeezings too. The Carvanas, the Pelotons, the Tupperwares of the world. Tupperware got a big pop the other day post earnings. A lot of these beaten down growth plays are getting bids post earnings. And obviously regional banks wouldn't be a growth play, but they're beaten down. They're embattled, right? And so I think we can still see a little bit more upside in these names. After that, we'll see how they perform into the fall once the commercial real estate stuff comes home to roost, but as well as many other things, rate hike lag effects, etc. But right now they're holding up, and we'll respect them here. KBE, same thing. Broker dealers holding up as well. That did back off on Friday, still holding trend. That can go to 530 still, but it is really, really, really overbought though. Okay, let's get over to energy and commodities. Crude here having another nice week. This is a little overbought here. We did not get above our weekly resistance. So we tested it. Actually, as we're doing this video, we're actually at 82.72 right now. And that's actually the level. I'm doing this video at 4:52 p.m. And the futures close in 8 minutes. So I'll try to come back to this at the end to see if we close above this level here. At a minimum, I think the big level right now is 83.53, just because that's the pivot high there. But it's going to be interesting to see if we close above that level. Either way, crude is a little short-term overbought. This is going to account for a lot. This accounts for 2/10 of the CPI right there. Just the move that we've had in crude. I'm very interested to see what CPI looks like later this month. But watch that level, 83.53 on a weekly close, squeezes you up to 95. It doesn't mean it'll go up in a straight line. I would like to see a pullback first. I think we're a little overbought in the weekly, but energy's been really good lately. XLE, that continued higher this week. Again, even with the sell-off on Friday, this remains strong. Still into a little bit of a weekly pivot, but that looks good for a move into the low 90s. XOP popping through my trend lines here. That is into resistance as well. So again, I think crude and energy in general, oil-based energy should be, has to do some backing and filling here. But I mean, I like what the charts are doing here, and they look good. OIH still remaining strong. Again, looking a little tired. 1, 2, 3, 4, 5, 6 weeks in a row up. Probably needs to stall out here, but that still wants to get up to 370 or so on the OIH. So big moves here in the energy space. Nat gas all over the map this week here, sold off earlier on and then came back up. Still has a good weekly chart pattern here in play. Nice up move and then consolidating inside of that with a inside hammer there to close out the week. All right, dollar index. Actually, let's go to uranium first here. So CCJ here, a little bit of a back off. It had a nice pop last week. Came down to the 20. And then it backed off a little bit after that. But again, this is holding up on the weekly here and the monthly. So I like what it's doing there. Again, going into a big wide range red bar there that has a lot of volume. So it's not going to go up in a straight line, but I see uranium plays holding up really well. URNM had a nice pop earlier this week, came back in. This looks fine here on the weekly. Nice consolidation pattern. And looks good for a potential move higher here. So uranium still holding up. Ag names, Mosaic. Again, that's still chugging around. That held that 40 handle. I talked about that being resistance, and that's holding up right now. So no real problems here in the ag space. IPI, that looks like it wants to get through this area. So I talked about 25, 27 being resistance, and that's been the case. But you had a test early yesterday, and it came right back up, and you're doing what you want. You want to see consolidation here. Preferably on a weekly basis. If you get through that, you can go to 30. NTR also having a decent week as well, although it did come back in. But again, it's holding the moving averages, holding up okay. You do some more stalling out here. This can push up as well. DBC, again, we had that kind of higher lows there. We pushed up. Nice bullish pattern there on the daily. More consolidation can push this up. You see the same thing there on DBA. So ag, and again, this is all inflationary here, but ag holding up really well, and I don't see any issues here on the charts. I think commodities are starting to come back. Wheat also pulling back here. This is into some interesting levels. I do think wheat is poised for a move into the 800 handle. So again, ag looking good, and soft's looking good as well. All right, dollar index here. So let me get over here. So we'll look at the DXY. So that's finishing right at 102. It did test our weekly resistance level. We talked about this last week, 102.56, spot 4. We did not close above that, obviously. But right now, on the daily, you can make a case it's just trying to consolidate. If the dollar starts to head lower, then we'll kind of take it level by level. Probably you want to test 101.25 first, or if it starts to flag, then it can push up to 103. But really for me, I need a weekly close above 102.56 and then really a break of 103 to get bullish on it. Right now I'm kind of neutral to bearish just because that weekly pattern has not told me to get bullish. So again, the dollar bears held. They did what they needed to do this week, and we'll respect that moving forward. And if that remains the case, then we'll continue to be that way. Gold here, kind of just chopping around a lot this week, but it held up pretty well. Again, I think gold, maybe an uncertainty play here as well. So even with yields ripping higher and the dollar getting a bid this week, gold did hold up. It did back off, but it held up for the most part. It filled that contract gap finally. And you see the GLD kind of showing a little bit of a different picture because it doesn't have that futures rollover. So it's almost kind of like you have kind of like a pullback pattern here with slight lower lows, whereas gold, G futures, has those slight higher lows there. Basically, the easiest way for me to look at it is you get above 2,000, you can rally to 2050. If you start to break these pivots, it's back down to the 200 moving average. that's really as simple as I can put it right now. If you get through the 200, then down to 1850, I think that's a good support level on gold futures. I never like trading through those contract rollover gaps, especially when they're that sizable. But silver, on the other hand, that did kind of break through this little channel, but it held that trend line that we've been following for a long time, and silver holding up okay. So right now, if we start to break lower, if we get a bounce, a lower high and break this, it's down to 21. That's a good level that I like personally. If we do push higher, then we'll see how it reacts around 25, 25.50. But right now, precious metals still in a range. Platinum backing off as well, although it got a bit on Friday. I'm still looking for one more drop in this to get involved. And palladium, I'm still looking for one more push down here as well, but that is, that's been sideways really for a month now. Copper, interesting action this week as well. Tried to break out on Monday, got to 4, reversed hard, and now just kind of stuck back inside of this wedge. If you break down, 370 is support. If you break up, we'll look at about 405 to 410 here in the near term. Okay, so lastly, over to Bitcoin here. So Bitcoin, again, just range bound again. We did have a little bit of a bear trap type candle on Tuesday, and then we kind of just got right back into range there. The weekly chart pattern still looks really strong to me, so I think Bitcoin looks decent for a pop. Daily is a little bit sloppier, but this has a good look on the weekly there, and I'm going to give Bitcoin the upside bias for now until proven otherwise. So pretty simple there. The crypto market's been pretty quiet as of late. Okay, lastly, let's get back over to the spiders here real quick. It looks like it's 5 o'clock. Let's just, for the fun of it, let's take a look. Okay, so they did push that crude down. It was funny. It was down on. It was at that resistance set to the penny there. So no close there above that level on crude. But that is the level to watch, obviously, moving forward. But again, lastly for the spiders here, again, down 0.5% today. I would expect in the short term a 444 test, maybe 442.50. Possibly even this trend line or the 50 moving average, definitely the 50 moving average on the triple Qs, and then we'll kind of reevaluate it from there. But right now, definitely looks like some volatility coming into the market. Speaking of the VIX here, nice pop a week or two ago inside of that, and then another pop here, and the VIX held the 50 moving average today after a test, and it went right back up to the highs. So smart money maybe knows something's going on. Because VIX is up pretty big here, and I did think that it would bottom in the month of August, and there's a lot of cross currents going on right now. Again, I don't expect a ton of volatility here. I do think you get one type of at least one more bull bounce, maybe even a new nominal high in the spiders. It's very rare that you get a big sell-off, like a big volatility event sell-off from a high. Usually there's at least one lower high or one kind of technical damage done to the chart, and then a nominal high, something of that nature, before a bigger move can come in. But either way, we definitely need to start getting into caution mode here for the markets, as it does feel like there is something big kind of lurking around the corner. Anyways, guys, gonna wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I will talk to you guys all next week.